Good morning, I'm Robert Tan. Join us as we follow the money from the financial choices that shape the daily life to the bigger forces driving the economy. The headlines. Fuel prices are heading higher again, ending 3 straight weeks of rollbacks. It's a big week for economic data. We get April inflation, first quarter GDP, and March jobs data, numbers that will tell us how much of the Middle East crisis has already impacted Filipinos. Manny Ocampo, President and Chief Operating Officer of Investment and Capital Corporation of the Philippines, joins us to help read the signals from interest rates and the peso to what investors and companies may be watching next. Prices of diesel and gasoline are likely to increase this week, though it will not be a double-digit jump. Sulit has our top story on Follow the Money.
Motorists may expect another round of oil price hikes tomorrow, May 5. An informant told Bilyonaryo News Channel that diesel prices may increase by 1 to 2 pesos per liter, and the price hike for gasoline may reach 2 to 3 pesos per liter. Escalating tensions in the Middle East have rattled global oil markets anew. U.S. President Donald Trump earlier announced a planned humanitarian maritime operation beginning Monday. Trump says this would free commercial vessels stranded in the Strait of Hormuz. This comes after reports that Iran has restricted most international shipping through the critical waterway for over 2 months, allowing only Iranian-flagged vessels to pass. Trump warned that any interference will be met with a forceful response.
Would you restart military strikes on targets?
Well, I don't want to say that. I mean, I can't tell that to a reporter. If they misbehave, if they do something bad, but right now, we'll see. But, you know, it's a possibility that could happen, certainly.
The Energy Department previously raised the possibility of fuel prices rising again this week. Energy Secretary Sharon Garin says that the peso continues to weaken against the US dollar, impacting local fuel costs. Sulit, Bilyonaryo News Channel.
Let's check on how the peso is trading after the long weekend. It strengthened slightly against the US dollar this morning, but remains in the 61 level, opening at 61.42. The local currency last closed at 61.49 Thursday. An analyst sees the peso slipping further to the 62 level. We're following the release of 3 key economic data this week: April inflation, first quarter GDP, and March jobs data. Together, the numbers will give a clearer picture of how much the Middle East conflict is weighing on the Philippine economy. An analyst sees April inflation going above 4% as high fuel and transport costs filter through food prices.
So for the entire year, the inflation will remain above target. We may see a stubborn inflation, very sticky inflation, and that would be a number that's going to be definitely above 4%. And it could be like, best could be like 5%, but it could be higher than 5%. As the BSP has said, it could be averaging 6.3%. Some economists are projecting like 8%.
Then this Thursday, we find out how fast the economy was moving at the start of the year. A senior research fellow at the Philippine Institute for Development Studies expects first quarter GDP to land between 3.5 to 4.2%. That would be only slightly better than the 3% growth recorded in the fourth quarter, meaning the economy may have avoided a deeper slowdown, but is still far from a strong rebound.
But this is reflective of softer consumption and investment given the inflationary pressures we're seeing right now. And given such estimate, for the full year, growth could play around 4 to 5%, supported still by services and OFW remittances, but this is still constrained by high costs, cautious spending, cautious investing, even made more pronounced by external uncertainties.
The March jobs data will also be released Wednesday, showing whether companies are starting to pull back on hiring and manpower amid the Middle East crisis. In other news, the House Committee on Justice is expected to adopt today its report finding probable cause in the impeachment complaints against Vice President Sara Duterte. Committee Chairperson and Batangas Representative Jervel Luistro says the report, resolution, and articles of impeachment will be sent to the House plenary for consideration. The committee is recommending that the articles of impeachment be transmitted to the Senate for trial. Up next, where are investors putting their money amid economic uncertainty? Joining us is Manny Ocampo, President and Chief Operating Officer of Investment and Capital Corporation of the Philippines. Keep following the money here on the Bilyonaryo News Channel. Welcome back. Every major headline is now hitting our wallets. Inflation, interest rates, peso weakness, and global uncertainty. Where is the money moving now, and how should Filipinos reposition? Today, we follow the signals, we follow the capital, and we follow the money. And joining us this morning is Manny Ocampo, President and Chief Operating Officer of Investment and Capital Corporation of the Philippines. He is one of the country's respected voices in capital markets with decades of experience in market cycles, capital raising, and institutional investing. Manny, welcome to Follow the Money. Thanks for joining us.
Hi, Robert. Great to be here. Thank you.
Okay, Manny, before the headlines catch up and before retail investors react, what is smart money already seeing in the Philippine economy right now?
Well, to state the obvious, inflation is pretty much as broken free, no? So it's running away, and I guess tomorrow the question will be how high inflation print will be. Will it be at the high fives, or will it break 6% already? So that's where the number seems to be, no? Now, second, and maybe more worrying is the recent credit. Well, our economic managers say it's a maybe a bit of a re-rating, but it really is a downgrade of sorts from Fitch, and we saw that. That's maybe a little bit more concerning in my books, no? And then the current situation we find ourselves in with Iran, and where are we going to a ceasefire? Are we, and all that? That remains to be a question. So,
Yes.
We're not really looking at geopolitical noise anymore. I think the issue now is really more structural in nature, Robert.
Now, but beneath the GDP growth, inflation trends, interest rates, peso volatility, and as you mentioned, the geopolitical tensions, what economic reality are most Filipinos and even many investors right now still missing? And which risk is actually most critical right now? What are you seeing?
Okay. Well, first, our energy bill is, when we import oil, and we're importing oil right now, but pretty much very high level. So the import bill really crushes the current account balances of the country, and that will continue to be under pressure in the coming months. So, and then our current accounts have being under pressure, that has similarly put pressure on the peso-dollar rate. No, the peso-dollar rate puts pressure on imports, etc. So it all sort of it's a stack of cards that comes crumbling down already. So now, okay, let's relate that now to corporate earnings.
Yes.
First quarter, we only had 1 month impact of the Iran war. The second quarter, we will have a full quarter impact of the Iran conflict. So it'll be interesting to find out how the second quarter numbers look relative to last year, or maybe even on a quarter-to-quarter basis. So we're going to be taking very close look at that, Robert.
Now, Manny, looking at the pressures, looking at the uncertainties right now. Now, in this kind of environment of uncertainty, is smart money still looking for growth opportunities, or is capital preservation now the dominant strategy?
Well, I think we'd like to, we'd like to take a more conservative stance right now. No, growth, etc. Catching up will be easy, but I think the investing stance right now that we will take is maybe capital preservation. There are too many things going against taking a stab at the markets right now. So we'd rather be cautious and take a stance on looking at capital preservation than timing and getting into particular sectors or companies at this point in time, Robert.
But looking at that, Manny, where does institutional money typically move first? Is it through, as you mentioned, cash preservation? Does it go to bonds, equities, property? Where does it go? Where does it flow today? What is attractive in the market today?
Yeah, so, well, if you notice, smart money is moving out of, we've seen, the foreign funds get out of the Philippine market, and that's preceded the locals again. So what is happening, even among the locals, we're seeing the domestic institutional funds start lightening up on equities. Are they going into bonds? Yes, people are moving into bonds for lack of a better choice, but smarter money is maybe moving out of and shifting, diversifying, if you'd like, to the US dollar assets. If you'd like, that maybe gives a hedge on certain things that are peso related. So if you move into dollar assets, you at least should have some protection on a peso dollar depreciation. We're right now still seeing, keep it short, maybe take a look at money market funds in US dollars and position when the US Fed starts kicking rates up over there, because they probably will kick rates up at some point in time.
But that doesn't look good for our local markets.
Well, okay, the local markets had to stabilize. I think we're finding we're looking for a level where things stabilize. Now, when does that happen? Maybe when again, we're still early on in things. I think we're digesting data, or we're waiting for data to confirm certain things. But once that's there, we may be looking at the index at between the mid 5,000s, for example, as a level where it settles. And that's really because you probably will have to re-rate earnings moving forward. The earlier part of the year, where we were looking at maybe certain forecast earnings for corporates, etc., that may no longer hold true, given the Iran war, giving cost push pressure, etc. So we'll have to take a look and re-rate earnings moving forward, Robert.
Now, Manny, as you see the stock exchange index struggling to sustain momentum, now, is the market undervalued, or is it correctly reflecting risks that the public is underestimating right now?
Well, the risk is there. I think the public is really anticipating that earnings will have to be re-rated, which is why the index is coming down. People will, and interest rates are expected to go up. So that's all being priced into the market now. Now, whether what is a reasonable level, we again need to wait for the data to come out. And unfortunately, second quarter data will only be will only be available about early August or so. So
Still a
in
long
the
wait.
meantime,
Yeah.
yes. So in the meantime, we're waiting. We're looking at signals from corporates. Are they deferring capex? Are
So-
they deferring new
Yeah.
projects?
Yeah.
So that's an indicator. We take notice of those things already, Robert.
And while waiting for the signals, looking at the opportunities of the things to come, which sectors right now in the Philippine economy are quietly building strength? And what's driving that conviction?
Well, I'm not sure if it's so much as building strength rather than people shifting to those sectors as a defensive play. No,
Hedging.
One sector clearly is utilities. Companies like Meralco, Manila Water, and Maynilad Water will continue to be fairly, shall we say, defensive or stable, and even under current conditions. No? Telecoms is another sector that we like, because again, as a necessity, telecoms is almost a utility now. Banking, the banks will do well even in adverse conditions, and considering in particular the big banks that have pretty much bulletproof their balance sheets already, and are taking maybe a couple of steps, are staying a couple of steps ahead of reviewing and ensuring asset quality remains something acceptable, because banks' exposure to corporates, they are taking a very close look at these days now. So if NPL rates are things that will continue to monitor among the banks, Robert.
Now, as foreign investors seem to be still on the sidelines, what exactly are they waiting for? What signals do they need to see? And what would finally bring them back into the Philippines, as also keep them back here instead of any capital outflows that we've seen? What would get them back?
So these are for the foreign investors. What's maybe one signal that they would take a look at or wait would be the ratings from the international agencies. Will we see a continued downgrade, or will the rating agencies postpone and maybe leave that re-rating, for example, for a later time, and see how the economy absorbs everything that's happening right now? So that's one thing that they will clearly take a look at, because if we get a ratings downgrade, the institutional money that's in will be forced by default, to start moving out, and that puts pressure on both the fixed income and the equities markets, because a lot of the funds are also invested in our peso-denominated bonds. So we'll take a very close look at that. The Middle East situation, are things going to stabilize, or will they continue to be, on a
Yes.
will peace remain to be on very thin ice? In which case, a prolonged conflict in the Middle East really doesn't
Yes.
do well for us and for the world economy in general. No.
Yeah.
Now the peso stabilization, the peso rate is something we also want to see stabilize. We've seen it, depreciate very quickly over the past few weeks, and people are looking at signals from the BSP. Will the BSP support? Will they let it go and all that? No?
Manny, I wish we had more time, but I'd like to ask this final question. As many Filipinos work hard and earn decent income, but still struggle to build wealth, what is the most consistent mistake that you see in personal money behavior? What would be your quick advice for those watching right now?
Well, okay. I think accept that we are no longer in a growth path right now. We probably are looking at maybe re-rating earnings, etc. So take a more conservative stance at things. Don't aggressively going to the market. If you are in cash, stay in cash. If you have the opportunity to move into US dollars, we would, I would maybe recommend taking that action.
Okay.
As well.
Okay,
Yeah.
great advice, Manny. Thank you. Thank you for your insights and your time this morning.
Okay. Thank you also, Robert.
Okay, let's take a look at how local markets are performing. As of 9:46 this morning, the PSEI is in the green, up almost 0.7%. Value turnover reached 1.2 billion pesos. Market breadth is positive with 81 advancers, 35 decliners, and 80 unchanged stocks. Meanwhile, early trade showed Jollibee Foods rising almost 2%. Meralco is also up over 1% ahead of its first quarter financial report to be released later today. In corporate stories we're tracking, SM Prime Holdings is pushing ahead with its reclamation project in Pasay despite a tougher economic environment. The project spans 360 hectares, bigger than Bonifacio Global City, and is expected to expand the company's footprint around the existing Mall of Asia complex. PAL Holdings is bringing back one thing investors have not seen in years, much cash. The flag carrier ended March 2026 with nearly 38 billion pesos in cash and cash equivalents, up sharply from 26 billion pesos at the end of 2025. PAL generated more than 16.6 billion pesos in net cash from operations in the first 3 months of the year, driven by stronger passenger volumes and improved revenue. And not bad for a quick bite. A Soriano Corporation added close to 400 million pesos to its bottom line from a short-lived investment in the Bistro Group. In October 2025, Anscor sold its 22% stake in TBG Food Holdings, the company behind the Bistro Group, for more than 1.9 billion pesos. That's less than a year after buying into the restaurant group for over 1.6 billion pesos. And that's all for today. I'm Robert Tan. Every day will help you make sense of the financial choices and the economic forces that shape everyday life. Thank you for watching. Keep it here on the Bilyonaryo News Channel, and always follow the money.